Good evening, Assalamu alaikum rahmatullahi wa barakatuh, and welcome to Mzansi Welcomes the World. My name is Faraz Patel. We'd like to thank you, the viewer, for staying with us here on Hilaal TV, DSTV channel 347. Of course, this is our G20 preview show ahead of the Leaders Summit that will be taking place between November the 22nd and November the 23rd. Much of the conversation will be that around the finances of the world. And as the world's leading economies gather for that G20 Leaders Summit, global attention turns to the state of monetary policy, inflation, and economic stability. For South Africa, these discussions come at a crucial time as the country is navigating a challenging growth environment while balancing its commitment to price stability and financial resilience. At this moment, of course, South Africa is targeting a 3% GDP growth. And of course, our unemployment rate is sitting on that 40% mark. Can this Leaders Summit allow for there to be room for investment within the country, number one, but also to find stability within the country's economy? Joining me now, I'd like to welcome David Fowkes, who is a member of the South African Reserve Bank's Monetary Policy Committee, and of course an important role that SAR plays within the managing of the country's finances. He joins me in studio. David, absolute pleasure having you on. Thank you so much for joining us.
Thanks so much for inviting me.
No, it's an absolute pleasure. David, I want to start off, of course, with South Africa's removal from the grey list. This, of course, happened on October the 24th. A very important time, given that it was just 4 weeks leading up to the G20 Leaders Summit. What does this mean in terms of South Africa's finances and how we move forward with our economy?
Yeah, look, it's great that we got off the grey list. We were expecting that this was going to be the meeting, but it's nice to see it confirmed. The team has done a tremendous amount of work, especially the team at National Treasury, supported by the SARB, to kind of get through that list of things that FATF needed to see. And so we got off it, and it's a good news story. I think we kind of got off it in time. If we'd not got off it this time, then that extra scrutiny really gets laid in. The whole cost of doing business goes up. I think as it was, people saw, okay, these guys have been given a warning, they're going to deal with it, they're going to get this problem to go away, and so, you know, we can continue business as usual. So that big effort, I think, paid off.
Yeah, you know, it's the interesting part about this. The timing was just perfect. I mean, I was at a conference, a Chamber of Business conference, and a lot of the business think tanks, they were saying, this is it. The timing could not have been better. 4 weeks, which gives room for Treasury, for the business community within South Africa to say, listen, we're off the grey list. South Africa still remains a perfect destination to invest in.
Yeah, I feel like there's a little bit of a re-rating of the South Africa investment case going on. We've had a period of quite intense pessimism, probably got to its worst point in, say, 2023 around Lady R and so on. But the direction of travel has been pretty good since then. And so, you know, a little bit of extra momentum in growth, the reforms coming through, fiscal outlook improving a bit, inflation being low, rates coming off the grey list. There's actually quite a lot of good news story.
Yeah, I agree. And of course, happening right before that G20 Leaders Summit. David, what is the mandate of the South African Reserve Bank in terms of South Africa's G20 presidency? You were talking to me off air that a lot of work has been done within the finance track. Officially, the finance track has closed its business. You've handed, of course, it over to Washington, with the US taking over the G20 presidency next year. But the mandate that the SARB has played within this year, a lot of work. I've been following the SARB. I've been following the governor, his speeches. For the viewer out there who may not understand, just give us a brief breakdown in terms of that.
Sure. Okay. So G20, when it starts off, you know, in the wake of the Asian financial crisis, like 1999, it's just finance ministers and central bank governors. There's no heads of state summit, the thing that we're about to host in Joburg, that doesn't exist. That only comes along after the global financial crisis. They have the first heads of state meeting. But it was always kind of like the finance leaders, so the central bank governor and the minister, you know, doing these summits and doing global economic governance. And so, you know, all the work that the SARB does is, you know, alongside National Treasury on this range of economic issues, you know, the whole batch of debt issues, the payment issues, these things. And so, you know, different work groups, the SARB leads or Treasury leads, things like, you know, governance of global international institutions like the IMF and so on, very much the Treasury in the lead there. But, you know, the things like the payments section, which is where the SARB has you know, that's kind of the SARB's key role.
Yeah, I want to focus on the cross-border payments. It's been a big driving point from the South African Reserve Bank to say, we need to go ahead and execute cross-border payments. And this is, of course, part of the push from the G20 presidency that South Africa has held. Explain to us about that, first of all, for the viewer out there who maybe not have an understanding of cross-border payments and why it's necessary. And number two, how important is it that South Africa takes the lead in terms of allowing this to happen?
Yeah, absolutely. So, you can always do a payment across borders,
Right.
but it can be very slow, it can be a cumbersome process, it can be expensive. So there's all this work on cross-border payments. We wanted to put a spotlight on it because in our region, payments work across borders
Yes.
worse than pretty much anywhere else. That sub-Saharan African corridor, some of the corridors, just like Joburg, Harare,
Yeah.
is a really difficult place to send a payment and, have most of your money get to the other side without a whole lot of it being eaten up by fees, to have it get there in good time and so on. So we said, you say this is a little bit of an esoteric issue, but in another way, it's really fundamental for just
Yes.
ordinary people. You make money, you want to send across border, and then you have this horrible experience. And so we want to say, let's put a big spotlight on this. This is a way that you can really help, better integrate African trade, flow of finance, flow of people, and so on.
And the fact that we, of course, have the Africa Free Trade Agreement, I mean, that helps a lot, doesn't it? And I know it's been a massive push by President Cyril Ramaphosa. So with this cross-border payments and the Africa Free Trade Agreement, here you have two mechanisms that can really work well for this continent.
Yeah, absolutely. I think this is the right issue for us to be focusing on. When you then get into it and say, okay, why do we have these problems? You get into the weeds very fast.
Yes.
So it turns out a lot of what you actually achieve by being the G20, by saying this is a priority, is you can mobilize all sorts of experts from around the world to come, right onto the ground in a central bank in some small country where there's a particular issue and say, okay, we can help you solve this problem. And so actually, although it sounds great as sort of a big marquee issue, it's actually lots and lots of little problems within countries which you have to sort of tick off one by one. And so I think that's what we've helped do with this G20, is get that expertise to come and work on these things.
Yeah, you mentioned expertise. How much of that has come from the African continent itself? We're going to touch on it in the next segment. It's just not South Africa's G20 presidency. It's an African one also. With the cross-border payments and, of course, with the Africa Free Trade Agreement, how much have the African delegation really bought into the saying, well, we're going to back South Africa on this because we see this as beneficial for the entire African continent?
Yeah, I think there's a lot of support for that, and I don't hear any criticism. I think really people appreciate it when we say, okay, here's this issue, and we know you're worried about it, we're worried about it, here we are, and what we're going to do with our presidency is prioritize this thing. People, that's great to hear, that here's this problem that's been bothering you, and everyone else has been ignoring it, and then you show up and say, okay, we're not going to ignore this thing at all. This is going to be a priority issue for the G20. So I think we're getting some traction.
David, I want to spend some time talking about exchange rate volatility, but let's start off, of course, with the tariff hikes, because I think when Donald Trump had announced Liberation Day back in April, a lot of the concern had been here within South Africa because, of course, South Africa has the AGOA agreement. How has SAB looked at it to say, okay, if we're going to have this tariff uncertainty, we need to make sure that South Africa still has a pathway of not allowing this volatility to hit our markets and ultimately, of course, have an impact on the economy of our country?
Yeah. So at the start of this year, we're asking ourselves, how bad is this going to get?
Yeah.
Right at the start of the year, it looked like it was going to be pretty bad.
Yeah.
And so that story of why it looked like it was going to be so bad involved things like the US having more inflation, having higher interest rates, the dollar getting stronger, which is kind of the textbook response to tariffs.
Yes.
And all of that putting financial pressure on everyone else in the world, including South Africa. It makes the rand weaker, it pushes up global interest rates, has an effect on us. And then in addition, you get all the negative trade stuff, the lost demand.
Yeah.
So you get two bad shocks. You get higher inflation with higher interest rates, and you get worse growth outcomes.
Yeah.
The year has not played out as badly as it could have gone. Actually, what happened is the dollar's weakened. It was extremely strong to start with, but it's weakened quite a lot. The rand's actually fared pretty well over the course of this year. It is fairly clear there's going to be a growth hit to South Africa, but not an enormous growth hit. Something on the region of 0.2 to 0.4 of growth, which is nothing to dismiss, but it's not as bad as it could have been.
But it's something, it's significant.
It's absolutely significant.
And from a SAB perspective also, David, I mean, the repo rate, I know it's difficult for SAB to try and say, okay, how do we go ahead and manage the expectations of the public? But I must say, and to your credit, to SAB's credit, the management of it has been pretty good. which is quite a good thing for the positive aspect for the economy.
Yeah, look, I think it has been a better year than I thought we were going to get.
Yeah.
If you could tell me in January that we can have a year that looks like this, I'd take it in a heartbeat.
Sure.
We've been able to ease off monetary policy a bit. The rates come down, so we're down 125 bips since last year. Inflation is looking pretty well contained. We've been able to say we'd like to clarify where we want to go in the 3 to 6 target. We want to go towards that 3. Current inflation is very close to 3. So I think it's been a better news story than it might have been at the start of the year. It's actually, in the history books, this one may go down as quite good for South Africa, despite all the volatility.
Yeah, and long may it continue, definitely, David.
Absolutely.
Well, after the break, I continue my conversation with David Fowkes. We're, of course, going to be chatting with regards to the importance that South Africa plays within the G20 from a financial perspective, and how SARB aligns itself in terms of domestic regulatory priorities. My conversation with David Fowkes continue after the break. Do stay tuned to Mzansi Welcomes the World. Welcome back to Mzansi Welcomes the World. My guest for these first 2 segments is David Fowkes. He's a member of the South African Reserve Bank's Monetary Policy Committee. Again, thank you so much for staying with us, David. David, I want to touch on the strengthening of global financial regulation. We spoke earlier on with regards to cross-border payments. How important is it that SARB aligns its domestic regulatory priorities with the global standards that have been set out in terms of that very same regulation?
Yeah, so, our view is that we're a founder member of the FSB. We want to be part of setting these regulations and then adhering to them and being a good member, a member in good standing of the global financial community. We want to be off the FATF grey list, and now we're off that. We want to implement Basel III properly. And the idea is, if this is a country which everyone can tell is well run, that adheres to the regulations, then our integration to the global financial system is going to work well. At the moment, there are some countries who want to dilute Basel III a bit, but we're not one of them. We want to say, if we need to change the rules, they must be changed together, but everyone mustn't go off and create their own adventure. Yeah,
and I think it's important, isn't it, to have that, sort of alignment within the global economies, because, we were talking just before we came after the break that we're not living in a bubble. South Africa is not in a bubble, and that there's a global community in the way finance works, and South Africa has to adhere to that. And what we've seen, obviously, in this current administration is that there is that push to go ahead and make sure that following the regulations from a global standards is very, very important.
Yeah, it's certainly important for us. And I think ultimately it protects financial stability. If you go 20 years since the last major crisis, then everyone starts to ignore that stuff and they start to say, oh, let's take some more risk. We can make some more money out of this. Then a crisis shows up, then everyone remembers again why you had these standards.
Sure.
The job of an institution like the SARB is to remember, so that when the party's going a little bit too strong, we say, no, we're going to hold on to these standards. There's a reason they keep us safe. And I think that's kind of the ethos of central banks. Is to remember what you need to do to keep the system safe across the cycles.
Yeah. David, how can monetary and fiscal coordination, both domestically and globally, support the structural reforms needed for sustained growth? I want to touch when it comes to South Africa, because there's a very massive push to have growth within this country, and we're going to touch on the GDP in a bit, to have the growth that can have a sustainable economy for us. And most importantly, that of trying to curb that unemployment rate. But let's start off, of course, domestically, and how monetary and fiscal coordination can assist with regards to that.
Yeah, we're at this place at the moment where, from the monetary policy perspective, we look like we have inflation pretty well under control. We've been able to ease off rates a bit. We'd like to see inflation settle at 3%, really anchor expectations there. And I think we're making some good progress. The Treasury story, and of course you'll hear this from the Minister with the upcoming MTBPS, is it's very important to stabilise debt. We've had a prolonged debt deterioration in South Africa, and there have been many promises made that it's going to turn the corner, and then that doesn't happen. It feels a bit now like we're actually quite close to that actual stabilisation happening, and I think people are so used to bad news on that front. Some good news is going to go down awfully well. The reason that's important for us is if you can take out some of that risk premium, if people can get used to this idea that if you look around the world, South Africa is not going to be this fiscal underperformer. The fiscal underperformers are going to be countries like, not even Greece anymore. It's the US, which has debt shooting through the roof. The UK's got debt pressures. France has got these pressures. A country like South Africa could end up looking reasonably well governed from a fiscal perspective. And that's helpful because it creates a monetary policy space if you take out some of that risk premium. Ultimately, we're trying to say from a monetary perspective that the way to lower rates is to have lower inflation, permanently lower inflation, 3%, not 4.5%. And if we can squeeze out some of that country risk premium, there's a bit of extra support there as well.
How is South Africa, because I know SARB keeps a massive eye on inflation. And of course, given that, South Africa is the president of the G20, how has South Africa in this last year performed vis-a-vis that from global inflation?
Yeah, so look, our inflation rate has come down quite nicely. The number's been fairly close to 3 for, roughly speaking, the last year. A few prints a little bit below 3, a few prints a little bit above 3, but pretty close to 3. So that's the bottom of our target range. Our inflation rate actually looks a lot like the US inflation rate at the moment. They're targets too, but the actual outcomes tend to be pretty close to 3 as well. And that may help explain why the rand's holding up pretty well against the dollar. I look around the world and I think, a number like 3% is a pretty wholesome inflation rate for a country like South Africa.
I mentioned before, David, this is not just South Africa's G20 presidency. This is also Africa's G20 presidency. What role do you see South Africa playing in shaping the G20's future economic agenda, especially when it comes to African economies? Because what happens in the continent ultimately has a reverberating effect here in South Africa.
Yeah.
So how is South Africa led in terms of it from a continental perspective?
Yeah, I think one part of that is building out this Africa engagement framework for the G20, which is meant to be this enduring structure for how the G20 engages with African economic requirements. And so I hope that's going to have legs. That's been a big effort this year. A funny thing about being the host of the G20, it's a little bit like hosting a dinner party.
Yes.
Part of it, you just want to make sure your guests are okay, that they're looked after. But we're still going to be there next year as a G20 member, and we won't spend so much time saying, and now we welcome the next speaker. We'll spend more time saying, these are our views on this thing and this thing. So I think there's going to be some power there. There's also this thing called the Troika system, which you may or may not have heard of. That is, every time there's a G20, the previous president, the current president, and the coming president form the Troika to help guide it. And so we will still be there as the previous president, as part of this Troika, where we can continue to say, we put these issues on the table in our presidency, and we want to make sure they stay on the table. Just my last point, we're going to have a tricky time with climate, because although we did a lot of work on climate and had this working group on climate, the US presidency is going to kill that. They don't like this stuff and it's gone. But, I think we've done some stuff which will survive past the US presidency.
You know what's interesting about that is that it was the complete opposite with the administration of Joe Biden, because there was a huge push from the Democrats to have this green economy. And of course, my next guest that I'm going to have after that, it's a discussion I'm going to have with him, Kes Kuvadia from B20, who you know quite well. Yeah. Donald Trump, he's got this famous slogan, drill, baby, drill. And he wants to make sure fossil fuels are kept. And then lies the big challenge. It's because from South Africa wanting to push for the green economy, you've got Donald Trump saying, no, it's not going to happen. I mean, that's going to be a difficult transition, isn't it?
Look, it is very unfortunate that this thing has become such a polarized issue in the US, that one party's for and one party's against, basically. But, fundamentally, climate change is going to be a very large challenge for Africa. And just as responsible economic policymakers, as people who think about these things, we can't afford to say in some years, this is not an issue this year. We're just going to forget about this thing. So we've got to continue this kind of work. We've done a lot of work in it this year. And, maybe the US presidency is not going to be the year for coordinated climate work under the G20, but there'll be a new president after that. And this issue is still very much going to be with us.
Yeah, and I think the interesting part of this is that, ever since the Global South took it over from Indonesia right up until India, Brazil, and then us, the green economy has been a big discussion point. And obviously we've, as South Africa, have maintained that sense of consistency. You mentioned, of course, the handover to the United States. I know there's been this diplomatic row between South Africa and the United States. Look, we're not going to discuss that. AGOA is an important part of the trade that South Africa has within the US. You went to Washington, David. How are US companies receiving South Africa at this very moment, given that we're not only the G20 president, but we are this leading economy within Africa? Do they still have confidence? Because when I drive around, you still have the big American brands that are here within South Africa, whether it's General Motors, Amazon, Google, so on and so forth. How is it right now, given that you've undertaken this meeting to Washington? Do they still have confidence within South Africa as an investment destination?
Yeah, look, there have definitely been these high-profile moments where you think, wow, the US-South Africa relationship's really deteriorated. But in many other ways, these are societies with strong connections and actually very positive connections. You know, even on the finance track relationships, when we talk of the Treasury and the Fed, you know, we can talk as professionals who respect each other, and it's actually quite an amicable discussion. So I don't want you to get the impression that at all levels of government and business,
they have been traumatized,
people have their views, and that's fine. We can have a professional discussion. We have a mutual relationship which is underpinned by a lot of shared interests and a lot of shared values. So although this is at the headline level quite a difficult year for US-South Africa relations, in many other levels the relationship's got a lot going for it. I think businesses are committed, certainly meeting with investors. There's a lot of interest in South African assets in the direction of travel, South African macro. The last 2 months, September and August, I haven't seen the October data yet, strongest months of bond inflows into South Africa on record. And certainly the guys we met with in Washington were very excited about putting their money in. So, that was good to see.
Yeah, I think that's a positive thing. The fact that there are businesses within the United States that still have confidence within South Africa. One final discussion point, and I want to spend some time on this also, David. Currently, we're flirting around that 1% mark, GDP growth. I remember attending a World Economic Forum breakfast. It was held in Sandton, and business within South Africa, whether it was, the banks, representatives from Treasury had said 3%. Now, they've given it 1 to 2 years, maybe pushing it to 3 years. From a SAR point of view, how close or how far are we from happening or achieving this 3% economic growth? I know it's a big push for Treasury at this administration, but can we see that happening anytime soon?
Yeah, so the story goes something like this. 2023, 2024, really disappointing growth, 0.5, 0.6, materially below the 1% number. This year is looking a little bit better. I'm not quite sure where it's going to land, but we're talking about a 1.2, 1.1, which is, I guess, very good compared to the year before, but certainly nothing exciting, not, as strong as population growth. Our forecast has growth getting close to, but not quite reaching 2% by 2027. So that's over our monetary policy horizon. And we think that growth uptick is driven partly by the cyclical factors.
Yes.
People are getting a benefit from somewhat lower interest rates, from the lower oil prices, a bit more confidence and so on. And then you've also got these structural reforms in play. We can see that load shedding is apparently abated. We can see that the logistics sectors are doing a bit better. Port volumes are better. Rail volumes are better. They're not all the way back to where they were in 2019, but the direction of travel seems right. I think this idea that we can get to 3% growth is reasonable. It will be such a game changer for South Africa, for us to start growing again, to have meaningful per capita growth. Living standards have been declining since 2013, 2014. It's just an astonishingly long time to have South Africans on an individual basis get poorer. If we get to 3% growth, you'll have meaningful per capita growth. And it's going to be some combination of the structural reforms coming through, the confidence picking up, the macro position improving, and then you could get there. But over our horizon, we think a number close to 2 is the most plausible sort of outcome. The big question is where investment's going to go. Investment is the thing we keep saying is going to pick up soon, and then it doesn't pick up yet. It's at its lowest level since 2003 for gross fixed capital. And so that's the number I'm watching more than anything else. You see, if this growth turnaround is really here, it's going to be in that fixed investment.
I think we hope by the end of November, a lot of that would change. David Fowkes, absolute pleasure having you on. Thank you so much for joining us. Much appreciated.
Thanks for this discussion. Really nice.
That's David Fowkes, a member of the South African Reserve Bank's Monetary Policy Committee. We're going to be sticking with business because after the break, my next guest is Casco Vadia. He's the Sherpa of Business South Africa, and of course, he's with Business Unity South Africa also at the same time. So do stay tuned. We'll have more for you on Mzansi Welcomes the World after the break.